Shit talkers, all of you, welcome. It's been a while. It's been a while. I know you didn't miss me, but that's okay. I don't have to be missed. I know you didn't miss me. It's been so long, I even forget how to even do a live spaces here. I made a post, which I was actually encouraged to do this post after reading a barrage of posts talking about the potential Bitcoin top that's already in. One post that, I'm glad this time I grabbed the top. I did sell some Bitcoin at the top and so forth and so on. And my post directly pointed at a fact that I believe the vast majority of market players don't realize, especially relatively young market players. And that is that if you're looking to accumulate wealth in any viable asset, not just Bitcoin, any viable asset, that you have faith that will increase in value over time, that you do not acquire wealth by selling the tops. You do not acquire wealth by trying to time exits. That is not how wealth is accumulated. No one has gotten wealthy with that approach. And I believe that most people don't understand that what they're applying is a trading approach to an investable wealth building asset. And that's where the flaw is. The flaw is in using a trading approach, which is an income producing approach. Trading is not a wealth building activity. I am not saying that a trade can't score big. I'm not saying that. What I am saying is that the activity itself, trading, and I've been a trader for 44 years, guys, 44 years. I was a NASDAQ market maker back in the mid 1980s. Started my career in 1986, started my own trading firm in 1994. Guys, I owned the second largest direct access brokerage firm in the United States in the 90s and sold it to Charles Schwab in the late 1990s, 2000. What I'm telling you is that I have credentials to talk to you about what trading is, and trading is not a wealth building opportunity. Yes, you can technically get wealthy, but the activity itself is an income approach to the market. Investing is obviously different. Investing is a wealth building activity. And if you're looking to accumulate wealth, you don't sell the tops. That means, said another way, that you live through the pullbacks. You live through the temporary bear markets. And in fact, if you're really looking to take an asset like Bitcoin and have it deliver wealth for you, your badge of honor should be how many pullbacks have you survived. That's a statistic you should be proud of, and it's a statistic that you should wear as a badge of honor, not I sidestepped the bear market. I sidestepped this pullback. That is a game for chickens. Do you understand? And what I mean by chickens that just peck at little tiny profits. You will never acquire wealth selling on the way up. Never, never. That can't be your approach if your goal is to acquire wealth. Now, if your goal is to basically grab chicken bites, pops to the upside, that's a different story. And I would just say that there are a million other things that you can apply that approach to. That is not the approach I would encourage you to apply to a wealth generating asset like Bitcoin. Someone said, Oliver, are you really just saying it's time in the markets? That's a component, but it's a lot more complex than just buying Bitcoin and holding it. You can't do that either. Wealth is not going to come to you in Bitcoin if you buy it once and hold it forever. It's not. Maybe if you buy a lot, but I'm willing to bet that 99% of the people here probably are not in the position of buying healthily enough one time and having it deliver generational wealth for them over time. So buying and holding is an oversimplification of how wealth is accumulated as well. There's other things you have to do. First of all, you can't stop buying. A consistent going in via obviously something like dollar cost averaging or some form of continuing to add is very necessary. So in addition to buying and holding, you must always be buying and holding. That's part number 2. Part number 3 is something that I think is lost on a lot of people as well. Wealth is not made on the way up. You don't make wealth on the way up. Wealth is made on the way down in your asset. And this is one of the main reasons why you will not get wealthy selling tops, because the idea behind selling a top is to sidestep the downward movement, to skip the bear market period. But I'm here to tell you that that's where your wealth is created. It is created inside the bear market. It is created on the way down. What you do on the way down is what creates future wealth on the way up. If you do nothing on the way down, you will not have created wealth on the next move to the upside. Yes, you must buy and hold. Yes, you must continue to buy. In particular, you must have an accelerated buy approach during the bear market. It's the most important part of the entire cycle. You don't do anything to make an item go up except pray. You do not call up your billionaire friends and say, I'm in, can you guys all buy now and lift the asset for me? You do absolutely nothing. Your contribution to the up move is zero. Your contribution is in the bear market, and you guys are trying to escape your responsibility. If you want, well, your responsibility is in the down market. That's your most important time, your most important work. You go to work overtime in the bear market, and you guys are trying to skip it. That's not how it's done. What you do on the way down will dictate how wealthy you are on the way up. And the people who are trying to accumulate wealth by timing selling the top, they almost always wind up with less and never wealth. And there are inherent problems with that approach. Number one, you don't know where the top is. For every time you show me someone who has nailed the top, I can show you hundreds of people who thought it was the top and it wasn't the top. In addition to that, even if you got lucky, that's what I'm going to call it, you drew a few squiggly lines on Bitcoin's chart and you got lucky selling the top, you are not going to hold on to the money for a year to 18 months. You're not that good, buddy. You're not that disciplined, buddy. You're not going to lock that away, put it on the sideline, don't touch it, and wait for the potential Bitcoin bottom. You're not that good. You're not that disciplined. That only happens in Disney movies. You're going to fuck up the money by buying something. You're going to fuck up the money by thinking something else in the meantime while Bitcoin is going down is a good opportunity, and you're going to lose on that. You're not going to keep the money safe for the buyback in. That's what you say you're going to do, but that's when you'll wake up and realize you were freaking dreaming. That's not going to happen. On top of that, if you happen to be somewhat disciplined, if you tell me, Oliver, no, I will hold on to the capital, even if it's 18 months, your wife's going to take the money and spend it, or your significant other. I know how this goes. It almost never happens. On top of that, you're not even going to know where the bottom is. You're going to think it's an 80% drop, and it's going to be a 40% drop and rip to all-time new highs. You're going to think it's a 40% drop, and it's going to drop 80%, and then you're going to get out again and lose. Guys, this never, ever works for wealth. You get lucky a few times, but over time, the top seller winds up with less and less and less every goddamn cycle. It's not how it's done. And that is not the approach that you even think about applying to a wealth generating asset like Bitcoin. Bitcoin has the potential to deliver generational wealth and you're fucking around with trading profits. That is like showing up to a gunfight with a freaking toothpick. It's disrespectful to Bitcoin to be talking about trading gains with it. There's a zillion things out there to utilize for trading gains. This is not the thing you do that with. So let me tell you a story, a little historical story about me. I started my wealth journey in 1981. I started it with one play, Eli Lilly. I put everything I had. In addition to that, everything that my family had. I formed an investment club with my family members. We all put in everything. And I made the decision to put everything we had in a company called Eli Lilly in 1981. To this very day, we have Eli Lilly. I went through 9 to 10 year bear market in Eli Lilly, continuing to buy. And on the other side of that 9 years of accumulating, it was 2000 to 2009. I remember it like it was yesterday. I felt like, is this ever going to go up again? Ever? A 10-year bear market. But I did not stop my accumulation. And OMG, what happened on the other side of 2009 threw us into a category that I'm just not even going to say. Huge. My second major wealth play was with Microsoft in 1994. I have lived through 30 plus different 20% or more declines in Microsoft since 1994. I still have it, not all of it, because every time I sell out of a portion of these long-term plays, you know where it goes into Bitcoin. But here's really what I want to tell you. In 1997, I decided that I was going to invest in Apple for my children. And so I started their trust funds with $2,000 of worth of Apple stock at the time. This is 1997. Each of them, $2,000. And I bought an additional $2,000 for their trust funds every single month for 20 years. For 20 years, I did this. $2,000 per month, each child. Now listen to me. My son tells me a couple of months ago, Dad, do you know I was looking at your early transactions in my fund, and do you realize that the very first $2,000 of Apple stock, the very first 2,000 is now 1.3 million? And I didn't even think about it. I was like, son, are you sure? Did you do that math correct? And he's like, yeah, Dad, I think I did. 1.3 million. That's just one of them. The first one. I did $2,000 a month for 20 years for each child. And I never sold until, well, they can do whatever they want to with theirs. But I never sold mine until Bitcoin came into my life. And I began shaving some of my Apple stock down to go into Bitcoin starting in 2021. 2021 it was. But guys, my point is this. That's how wealth is acquired and accumulated. Understand? That's how it's done. It is done with time, yes, but it is done with not just time. Just time is not going to cut it. It is the constant DCAing in the right asset. Of course, you can pick the wrong asset and DCA your ass into the ground, 6 feet under, of course. But we know we have the right asset. And so the formula is not just buy and hold. It's always be buying and holding. It's always be buying and holding and accelerated buying during the bear market. That is where your longest green is going to come from. It is going to come from buying the red monthly bars down. Your greatest wealth comes from that. And if you can do those 3 things, I believe you will have no problem creating generational wealth with Bitcoin. So once again, remember what the 3 things are. You've got to buy and not just buy and hold. You've got to always be buying, no matter how small, $10, $100, $1,000. Every month is fine. Every week is better. Every day is just entertaining. I don't think that has a big enough advantage over once a week. If you're looking for every day, thinking that going into Bitcoin at a little bit every day gives you a greater edge over weekly, you're mistaken. I've run the numbers. It's not a huge enough advantage to do that, in my opinion, but that's just more for entertainment. It's fun if you want to do it. But weekly is better. Monthly is fine. $10, $100, $1,000. So not only buying and holding, always be buying every month, at least every month. And you must design an accelerated buy program during the bear drops. That's the best part of the cycle. It's the most fun. Now, I am going to help you. If you want me to, I'll do it now. I will give you a rudimentary accelerated buy program for the bear markets, for the bear drops. Okay, here it is. So remember, your regular DCA is part 2. Your holding is part 1, but your regular DCA is part 2. This is in lieu of your DCA. So this is in addition to your DCA. You're going to add this in the bear drops. So you're going to take the crypto fear and greed index, and you can do 3 to 4 broad categories, but for the sake of simplicity, I'm going to explain 3 broad categories to you. So there is the greed reading, that's green, right? That's regular DCA. That's regular DCA, your regular amount. When you go into the cautionary area, like I think that's yellow or orange or something. I think it's orange. Yes, it's orange or something like that. It's not quite fear yet, but it gets there. You're going to double your DCA. So if you were DCAing 100, you're going to DCA 200 whenever Bitcoin is in those readings during the bear cycle. And when you get red readings like we have now, or I've had now, you try to triple. So that's a very rudimentary approach to utilizing the bear with an accelerated buy system. You want it to be systematized. Now, of course, smash buys are always welcome. I am talking about the smash buys are extra. I'm talking about applying a system that is applied in a systematic way. All right. So that's one accelerated buy program in the bear using the crypto fear and greed index. I'll give you one last one. You're going to go to the 4-month chart of Bitcoin. Do it now. If you can, do it now. Go to TradingView, pull up the 4-month chart where every bar represents 4 months. All right, that's what I want you to do. What you'll find when you pull that chart up is that Bitcoin has these, through the eyes of the 4-minute chart, it has these very orderly bear market pullbacks. Now, I need you to look at this on the logarithmic scale, all right? The logarithmic scale. You'll see these orderly pullbacks. I'll post this 4-month chart as soon as I get off the spaces, so you'll see what I'm saying. What you're going to do is you're going to use a 3 red bar count on the 4-month chart. So you're going to see after a series of green bar runs to the upside, the first red bar that happens, that's red bar number 1. You want 3 of them. So after 3 red bars down, you're going to double to triple your DCA until the bull comes back. There will typically be 1 more red bar to deal with after 3. Sometimes you may not get that. Now, neutral bars do not count as a count. So if one of those bars is really tiny, you ignore that one. We're talking about red down bars, not neutral bars that basically stay the same. So you ignore the neutral bars. We want 3 red bars. They do not have to be in a row, although most of them will be. And if they're not in a row, it'll be interrupted usually by a neutral bar. So neutral bars are to be ignored. Now, I buy throughout the entire red bar drop. I just get bigger and bigger as I get to that 3rd red bar. I'm at my biggest amounts going in. This will bring my average cost down relatively close to where Bitcoin is. So let me give you an example. I did this with my Bitcoiners during the last bear market, right, in 2022. All the way from 69, all the way down to 15,800 was my lowest buy. By the time we bought all the way from 69 regular DCAing, but using an accelerated buy-in, third bar down, boom, 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 big, 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 big. By the time we finished, our average cost from buying from 69 down to 15.5 was $21,000 a Bitcoin. Bitcoin regained that in a couple of weeks. And it made that whole downward move profitable at 21,000. That's how you do it. And all of that activity in the bear, this bull market delivered the wealth. Now, trying to sidestep that, it's never going to happen. The wealth is never going to happen that way. You see some comments here. Oliver, what would you recommend on the amount leveraged for Bitcoin? I would encourage you, since guys aren't really with me all the time, I have to be extra conservative. You should take that 4-month chart and only think about leveraging your Bitcoin on the third red bar down. And even then, keep that LTV no greater than 30 at that point. 20 is even better, but no greater than 30. You're deep enough in the bear after 3 red bars down on that 4-month chart. You're deep enough in the bear where you will have zero problem with a 30 LTV. Now, that's what I did. I did a leverage. I used Unchained Capital and did a leverage buy at 16,300 using that approach. I know some people are against leverage, but I think supercharging responsibly, if you know how to do it, that's a superpower. Turbocharge that thing, but you got to know how to turbocharge it. Turbocharge it. Okay, Booty makes a very good point here. So, Oliver, I've just waited until the weekly 200 period moving averages approach. That is a great approach because I'll tell you what it lacks, but using the weekly 200 period moving average as a guide for when you are at the latter stage of the bear market is a great tool. So it'll probably still keep going down a little bit, but if you do your most aggressive accumulation under the 200 weekly, oh, that's going to be golden. Now you can go back in history and see all the times Bitcoin spent time under the 200, and you'll see that was the best time to buy. But here's the thing, guys. Don't time your always be buying part. You only want to time the doubling and tripling up part. The regular always be buying, don't ever time that. So if you're weekly DCAing, I don't care if Bitcoin's $10 million. You put that weekly DCA in. I don't care if it's $1,000. You put that weekly DCA in there. That weekly DCA, you know what it's going to do? It's going to give you a superpower in terms of dealing with Bitcoin's volatility. DCAing weekly removes volatility for you. Everyone else is freaking out with volatility. You have no volatility. And you know what badge you can wear as a weekly DCAer? It's a beautiful badge, guys, that you can wear if you do it long enough. And I'll tell you what it is. People say, Oliver, what price of Bitcoin did you buy? I said, all of them. And it throws them for a loop every time. No, Oliver, I'm just saying, what price did you buy in at? All of them. So what do you mean? I buy all the prices, every single one. And I show them the weekly chart. See these weekly bars here? Every bar is mine. I tattoo my name on every single weekly bar. If you look closely enough, you will see OV on every single weekly bar. Those bars are mine. Do you understand? I sign my signature on every single freaking weekly bar. I own it. It's my bar. And I wear that with a badge. It's a beautiful thing. Wear that like a badge of honor. Guys, all I'm saying is, you really want Bitcoin to pay off for you? These 3 things, I am telling you, you can look at it through the past. Here's the last thing I will say to you. The reason why I find that most people they erroneously assume that timing is better because they have this idea that it will get more Bitcoin if they get the timing right. But over time, the timing is not right. And I'm telling you this as someone I made my career timing markets. And I'm telling you, over time, timing does not win. It can win for a while, but over time, timing loses. You wind up with less. So don't succumb to the regular DCAing, even when you feel like if I just hold back and wait a month or two, Bitcoin's going to be lower and I will pick it up then. Don't do that. Don't do that. So the way I try to indoctrinate my Bitcoiners, I tell them that every single individual purchase you make of Bitcoin, you just made yourself wealthier 4 years from now, majorly wealthier 8 years from now, and super wealthy 12 years from now. That one buy right there is a soldier that will work forever for you and deliver gifts beyond your wildest dreams every goddamn 4 years. Every individual one is a little soldier. Increase your freaking army. Increase your soldiers. Don't try to decrease them with timing. I want every individual DCA buy I make to reward me and my family forever. Forever. It will never stop working for you. It will never stop delivering for you. It will never. Because that little purchase, it gets scarcer and scarcer. Scarcity will affect it forever. Oh, yes, Bitcoin will become more and more scarce forever. There's no stopping of scarcity. People are going to lose it via deaths, sloppy inheritance planning, lost keys. Even Bitcoin's going to be lost through the dust factor. That happens every goddamn day. You've got dust where the amount of Satoshis is too small to move because the cost wipes the value out. The dust factor will get bigger and bigger over time, which means that the supply of Bitcoin gets smaller every single year. Every year. Dust, lost, human error, and deaths. No proper inheritance planning. Every single year. And that will never stop, ever. So that little buy gets more valuable forever. Hope you understand that. Look at it that way. Increase the number of your soldiers there. Should we use puts or something else to profit on the downside? If you're talented, well, yeah, of course. I mean, most people should not do anything but just focus on getting the buys in on the way down. That's when you go to work. That's when you are building your future wealth in the bear. So most people should just focus on that. Now, if you've got some market savviness, there are some things you can do to benefit during the bear as well. For instance, you can use MicroStrategy and some of as we saw, the Bitcoin treasury companies as your hedge on the way down. So every time those things bounce in a bear market, they will drop harder than Bitcoin. And if you know what you're doing on that side, yeah, you can double whammy the bear and actually turn the bear into a profitable enterprise for you. But that does require some skill. And by no means, if you're going to try something like that, do not let it interfere with the plan I just explained to you. This is all extra stuff. But yes, using the Bitcoin proxies, we didn't have the Bitcoin proxies last cycle. We had the Bitcoin miners, but now we've got the ETFs. They can be shorted. We've got strategy can be shorted while you're accumulating. It's a beautiful thing. Oh, okay. Hash, he says, I think he meant MicroStrategy. I remember this same stuff going on in the bear of 2022, right? Strategy is going to be liquidated, all the liquidation FUD, going bust FUD. My view is that there was a major MNAB trade on MicroStrategy that spread through the bulk of the hedge fund space. Chanos popularized it by talking about it publicly, which is kind of strange because most hedge funds want to operate in stealth. So you heard about Chanos doing the MNAV compression trade, but there were hundreds, guys, hundreds of hedge funds. What they do, it was perfect up their alley. So you had hundreds of hedge funds with billions of dollars on the line with this MNAV compression trade, which is long Bitcoin and short MicroStrategy. So that MNAV, as it became close, it went from, 4x to 3x to 2x to 1. As it approached 1x, these hedge funds are now scaling out of the trade. So that scaling out of the trade is scaling out of the Bitcoin long side. So the way you get out of the short on the strategy side is you buy the shares, but I believe that the short was done more in derivatives, which doesn't, coming out of the short on MicroStrategy didn't have an effect on the shares because that short was done via the derivatives market and not the actual shares themselves. But I do think it's close. I'm telling you, I think it's close. I think that can rip some faces if you stay with it too long. Do I think Bitcoin is going to make new highs in a few months? I was reluctant to say so because I don't like pontificating on something that Bitcoin has never done before. And if we're going to use Bitcoin's history in terms of time, the top is in. That's what Bitcoin's history is telling us, that the top is in. The top was made on October 6th. That's Bitcoin's history. But everything about this cycle is very different. So it is possible that Bitcoin has gone into phase 2 of itself, phase 2 of the adoption curve, right? Where the nature of the cycle, if there even is a cycle, but the nature of it changes. We saw new highs in Bitcoin before the halving, which has never happened before. We saw a level of volatility that was so low. Bitcoin had never been at such a low level of volatility. There's so many things that are different about this cycle. It leads me to believe that yes, it is possible that the bull is extended. Now, I'll just tell you this one thing. I have lived through this very same thing. My dad was a gold bug, which pretty much made me a gold bug for most of my adult life. And I was a hardcore gold holder. I mean, I had bullion. I had cages in London when the spot gold ETF came into being in 2004. I made that my primary vehicle for gold accumulation. And I piled in January of 2005. All right, GLD is the symbol. Now, prior to that, if you look at gold's history, it was very cyclical. So I would use that gold cycle, that gold cyclical cycle, drop down to 250, 260, 270, accumulate big, rally up to 400, 500 or whatever. And then every time it would drop. So I was very in tune with the gold cycle prior to the ETF. After, on the other side of the ETF, if you look at the chart of GLD, on the others, or gold, on the other side of the ETF, late 2004 onward, gold stopped having a cycle. It went straight up without any meaningful, it had pullbacks, but any meaningful pullback for 8 years in a row, 8 to 10 years in a row. And this was unprecedented up until that point for gold. Gold is a commodity. Commodities are normally cyclical, but the ETF stopped the cyclicality of gold. And if you look at the chart, you'll see it just straight up right until Bitcoin was born. And could this be what we're experiencing now with the new digital gold? Spot Bitcoin ETF kills the regular cyclicality of Bitcoin because, guys, you don't understand that when the ETFs provide a permanent institutional bid, some of you are too focused on inflows and outflows, and you miss of the ETFs, but you miss the fact that even on an outflow day, that's net outflows. They buy every freaking day. That means there's a bid in the market every goddamn day, every minute, every hour of the day, every minute of the day, every second of the day. There is a bid to buy Bitcoin by these guys. And that permanent bid was never there before. So it has to have a material effect on the pullbacks. That's why they've been milder this whole cycle. In 2017, the 2017 run, I think there were 7 or 8, 28 to 38% pullbacks from 1,000 to 20,000. There were 7 or 8 of them. We just had 2. We're going through the second one now. Think about that. There were 7 to 8, 30% or more pullbacks during the bull market. We're just got the second 30% or more pullback in the whole goddamn 4-year cycle during the whole bull run, 3-year bull run here. That's crazy. We're seeing the material effect of the permanent institutional bid. And that institutional bid is going to get stronger and stronger as time goes on because we're now in a different phase of adoption, a different phase of accumulation. The buyer is different now, or a different buyer has been added to the game now. Not a different seller has been added. No, a different buyer has been added. The buying is different. And so could we repeat what gold has done? And how uncanny is it that the years line up? Freaking uncanny is that? 2004, 2024, exactly 20 years apart. 2004 gold spot ETF, 2024 Bitcoin spot ETF. Gold stops being cyclical after 2004 and runs for 8 to 10 years straight up to the upside. 0 bear markets, 0 major pullbacks. Maybe that's what we're in now. Maybe that's what we're seeing. Maybe every single goddamn year is an up year or a pause year. Gold had some pause years during that period too. But maybe we're just on repeat. So yeah, it's possible. But let me just say this, and I keep saying I'm going to go, but I promise this is the last thing I'll say. I will say this. You should be hoping that we're in the bear market now because, guys, it is better for your future wealth that we're in a bear market and that we're going lower. It is better for your future wealth than Bitcoin taking off and outpricing your purchasing power. So yes, if you're DCing $100, $1,000, whatever it is, fine. But that $1,000 purchase is more powerful in the bear market. It is less powerful. Your $1,000 purchase is less powerful in the bull market. As it goes higher and higher and higher, your $1,000 becomes weaker and weaker and weaker. You make the wealth on the way down when your purchasing power gets more and more powerful. So if your goal is, well, you should be hoping that this is the bear market. You should be hoping that we're dropping back toward 45,000 or so. And that's where I would have the bottom if we did peak out on October 6th. High 40s, high to mid 40,000s. Want to know why? Once again, take a look at that 4-month chart. Has a lot of clues there. Love that article about strategy and JPM. A lot of speculation there, guys. I mean, nobody really knows. It was very entertaining to read, though. But, it could be true, but we have to call a spade, right? I mean, it is just speculation. But very entertaining. Loved it. So much fear in the markets. Yep, so much fear. But guys, if you're not going to sell the tops anymore, I hope that at least I make you think about this. If you're not going to sell the tops, who the fuck cares? If you're not going to sell the top, I mean, your life gets so much simpler. You stop being so emotional. You start loving the bears. I mean, we love the bulls too, but all right, if it doesn't come in, I just go to work again. All you're doing is making Bitcoin more scarce because I'm buying. Those sats will never see the light of day. You're buying. Hopefully, your sats will never see the light of day. So I say, bring it. Bring on the bear. Bring those red bars. All you're freaking doing is making my asset more scarce, and greater scarcity equals greater wealth in the future. So bring it. I don't care if it's the bear or not. I really don't. That's that warrior mindset that you should really have. I say bring on the bear. But if you have not gotten a sufficient amount of Bitcoin yet, I am telling you, you do not want Bitcoin to outprice your purchasing power. It might feel good for the moment, but I guarantee you in the future, you will wish that you had more. And the only way to get more is to not have it go up, is to have it go down. That's how you get more. You get less on the way up. You get more on the way down. So if your goal is more Bitcoin, you don't want the bull market. It's outpricing your ability to get more. It's counter to your goal. Bitcoin has this ability, all markets, in fact, have this ability to gravitate at times to the max pain scenario. And what is the max pain scenario? Well, I mean, we were all looking for $200,000 to $300,000 Bitcoin in by quarter four. That didn't come. In fact, we're so far experiencing a down year. The bet now amongst the majority of people out there is that we are in now the bear phase. Bitcoin has topped. So does Bitcoin disappoint on that side now? That would be max pain. Max pain is now Bitcoin goes to new highs in 2026, kills everyone that was betting on the cyclical top in quarter four, and it kills anyone who tried to bragging that they sold the top, and they're going to buy back on the bottom, and then there is no more bottom, and we blast off to new highs, and they wind up with having lost their Bitcoin on that topping sell of theirs. The shorts get clobbered and have piled on with the assumption that we have topped. Max pain, slap them both. The bulls were slapped. Now, is it time to slap the other way? That's the max pain scenario. And maybe that's what Bitcoin does. So I say be ready for it all. Hope for the bear, but be ready for it all. Good, guys. Love you guys to death. I do. I know you didn't miss me, but okay. That's all right. You know what to do. Stack harder. Always be buying. All right, guys. Ciao for now. Enjoy the rest of your Sunday. Boom.